Welcome, focused learners, to this high-energy explainer. Today, we are setting the stage for an absolute masterclass on a topic that routinely challenges even the most relentlessly prepared candidates. We are talking about the Cambridge AS and A-Level Accounting 9706 syllabus, and specifically, we are putting a massive spotlight on investment appraisal and the accounting rate of return, commonly known as ARR. Now, we aren't just going to look at textbook definitions today. We are going to completely deconstruct the exact academic benchmarks required by Cambridge. We'll be dissecting complex past paper questions, mastering time allocation, and deploying top-tier critical thinking strategies. To really bring this to life, throughout this session, I'm going to bring in the perspectives of two of my typical scholars. Let's call them Alex and Sam. Alex is highly technical, absolutely excels at memorizing formulas and facts, but tends to freeze up on open-ended evaluation questions. Sam, on the other hand, is our creative thinker, brilliant at crafting arguments, but struggles with structural precision and managing the clack. We are going to analyze their peer problem solving to show you exactly how to level up your own answers. If you have ever stared at a dense set of financial data and felt completely lost trying to justify an investment decision on paper, take a deep breath. You are exactly where you need to be. Okay, let's jump right into the deep end with this. Listen to this direct, high-stakes quote pulled straight from the principal examiner reports. Investment appraisal, accounting rate of return, ARR, is one of the most misunderstood areas in accounting. I want you to really let that sink in. This isn't just a casual observation or a footnote. This is a blaring siren, directly from the exact people who sit down with a red pen to grade your papers. The examiners are clearly reporting that year after year, brilliant candidates step into the exam hall and just completely stumble over the specific area. Why? Because they treat it like a simple math test instead of a comprehensive financial appraisal. Imagine an examiner sitting at their desk at 11 at night, grading their 100th paper, sighing because yet another student calculated ARR using initial investment instead of average investment, or forgot to deduct depreciation from cash flows to find the actual profit. Today, we are going to fix that, right now. I'm going to give you the examiner's lens so you don't become part of this statistic. So the absolutely critical question we have to ask ourselves right off the bat is why? Why do so many incredibly smart students bleed marks on ARR? Why is interpreting complex texts and data in these high-tariff 9 to 15-mark questions so incredibly difficult? Well, it almost always comes down to a fundamental disconnect between what the student thinks the question is asking and what the assessment objectives actually require. It's all about the anatomy of the command words. Let's look at this through the examiner's lens. When a prompt says analyze, it does not mean list everything you know. Analyze means breaking down the specific ARR data, looking at the useful life, the residual value, the accounting profits. But when the command word shifts to evaluate, that is a totally different ballgame. Evaluate demands a judgment. Is this 14% ARR actually acceptable given the company's target rate of 15%? Or what about explain versus to what extent? Explain is asking for the mechanics, but to what extent is basically begging you to argue. You have to provide a nuanced perspective, maybe acknowledging that while the ARR looks fantastic on paper, to what extent can we rely on it if it completely ignores the time value of money? You have to shift your mindset directly into this analytical perspective. To get you operating at that elite level of mastery, here is our time-blocked structural blueprint for this masterclass. First, the core principles of ARR. Second, a step-by-step methodology. Third, mastering critical analysis. Fourth, the top 3 exam mistakes. And finally, your final exam strategy. Let's start by unpacking Section 1, the core principles of ARR. The Cambridge syllabus makes it explicitly clear that top-performing students must demonstrate competence across 3 distinct cognitive domains, which we call assessment objectives. We have AO1, knowledge and understanding, AO2, analysis, and AO3, evaluation. Let's think back to our 2 scholars, Alex and Sam. Alex is an absolute machine at AO1. You ask Alex for the ARR formula and boom, average annual profit divided by average investment multiplied by 100. Flawless. But Alex struggles to connect that formula to the broader business context. Sam, meanwhile, understands the big picture, AO3, evaluation. Sam knows that a high ARR might still be risky if the project's payback period is too long. But Sam often drops marks by not showing the rigorous AO2 mathematical analysis to back up those great arguments. You cannot just memorize formulas here, and you can't just write generic business essays. You have to know the precise accounting principles, relentlessly analyze the specific data provided in the stimulus materials, and then evaluate the investment itself based on those solid numbers. The top-tier candidates, the ones scoring the A stars, show a deeply connected understanding that bridges all three of these cognitive domains simultaneously. This brings us perfectly to the ultimate academic benchmark that separates average scripts from exceptional ones: superficial breadth versus analytical depth. Let me take you into a digital study suite session I had with Alex and Sam just the other day. We were deconstructing a brutally difficult 15-mark essay question on whether a manufacturing firm should rely solely on ARR to buy a new production machine. Alex immediately started drafting a response that was pure superficial breadth. Alex was just listing out bullet points. ARR is easy to understand, ARR uses accounting profit, ARR ignores the timing of cash flows. It was just a massive brain dump of textbook facts. But Sam jumped in and said, "Wait, Alex, look at the prompt. The examiner doesn't want a generic list. We need to look at this specific manufacturer." And Sam was spot on. The assessment framework strictly prioritizes deep, logical reasoning. Instead of listing 5 basic facts, take one core principle, like the fact that ARR ignores the time value of money, and trace its logical implications with analytical depth. Explain how, for this specific manufacturing company, tying up capital in a 5-year project during a period of high inflation makes the later years' profits practically worthless in real terms. That is how you unlock the highest marking bands. Depth wins over breadth every single time. Moving right along, let's dive into Section 2, the step-by-step framework. Systematic processing with an investment appraisal follows a highly standardized, almost mathematical sequence. I want to walk you through this foolproof 5-step procedural methodology that examiners actively look for when they are grading your papers. Step 1. Completely deconstruct the examination question and extract the relevant data. Highlight the capital cost, the estimated residual value, the useful life, and crucially, whether the data gives you net cash flows or accounting profits. Step 2. Select the appropriate analytical framework. If the question asks for ARR, you need to mentally pull up the exact formula for average investment, which is your initial cost plus your residual value, all divided by 2. Step 3 is execution. Do the analysis with absolutely crystal clear working and precise notation. Step 4, verify your results. Do a quick sanity check to catch those silly, avoidable errors. And finally, Step 5, present your findings, using the correct terminology and the appropriate format, usually a percentage to 2 decimal places. This sequence is exactly how you develop professional, examiner-approved habits. Now I need you to pause and listen to me very carefully right here. Consider this a massive, flashing red examiner alert. Showing your working equals method marks. Let's go back to our study session with Alex and Sam. They were racing against the clock on a mock exam, drafting their response paragraph by paragraph. They hit a major roadblock. They calculated an ARR of 22%, but they were totally stuck on how to link it to the evaluation paragraph. I used my screen share to pause their session and point out something horrifying. They had used the net cash flows instead of deducting depreciation to find the profit. Their final 22% figure was completely, totally wrong. They panicked, thinking they'd just lost all 15 marks. But here's the cognitive strategy I explained to them to get unstuck. I told them to look at their paper. Because Alex is so methodical, every single step of their calculation was explicitly written out. The examiner could clearly see they correctly calculated the average investment and correctly structured the final division. Even though that one depreciation error cascaded and ruined the final answer, their clear notation secured almost all the critical method marks. Before we rewrite that flawed section into a flawless full-mark response, let's take a quick timeout. If you are serious about crushing your Cambridge exams and you want to master these exact strategies that examiners use to grade your papers, you need to hit that subscribe button for our channel. Ace the Exams IGCSE ONA levels at handle acetheexam_IGCSE. Do it right now and make sure you enable all notifications by clicking that bell icon so you never ever miss our weekly Cambridge breakthrough strategies. We are dropping these masterclasses constantly and you need this edge. All right, back to the paper. We rewrote that section by clearly showing the depreciation deduction. Initial cost minus residual value divided by the useful life. Once we inserted that single correct step, the entire mathematical proof locked perfectly into place. Never ever skip showing your procedural steps. Let's transition into Section 3, Mastering Critical Analysis. So what are the exact requirements for comparative analysis when we are dealing with the accounting rate of return? Think of this table on your screen as your secret code for unlocking those top-tier marking bands. Welcome to our interactive Pause and Practice visual workshop. I want you to imagine a complex data table right in front of you. Project X has an ARR of 12% and a payback of 2 years. Project Y has an ARR of 18%, but a payback of 5 years. I'm putting a 60-second visual countdown timer in your head right now. How do you analyze this? There are 4 non-negotiable comparative elements you must hit. First, scope. You must identify similarities and differences. Don't just list the pros of Project X and the cons of Project Y. Second, language. You must use comparative connectives. Words like whereas, conversely, or on the other hand, strictly force your brain to link points logically. Third, validation. You have to support every single comparison with hard evidence extracted from the stimulus data. You can't just say, Project Y is riskier. You must say, Project Y carries significantly higher liquidity risk, evidenced by its extended 5-year payback period tying up capital. And finally, synthesis. You must draw structured conclusions about the relative importance of these factors to this specific business. That is what logical, structured reasoning looks like to an examiner.
Let's move to Section 4, the top 3 exam mistakes.
Straight from the most recent principal examiner reports, here are the 3 exact pitfalls where students absolutely hemorrhage marks. Let's do another pause and practice exercise. Let's play Spot the Flaw. Imagine I display a poorly written student answer on the board that reads, the company should choose the machine because ARR is a percentage, which means it causes profits to go up. Okay, spot the flaws. Number 1, confusing cause and effect. ARR does not cause profits to go up. It is merely a mathematical representation of expected profitability. You must get your directional logic completely straight. Trap number 2, forgetting to check format and presentation. Remember step 5 of our framework? Examiners constantly note that candidates forget to express ARR as a percentage, or they leave it as a raw decimal, or they fail to compare it to the target rate of return given in the prompt. It's sloppy, and it costs you easy marks. And trap number 3, the most deadly of all, providing generic answers that are not specific to the context given. If the stimulus material tells you the business is a rapidly growing tech startup with severe cash flow shortages, and your evaluation just recites textbook pros and cons of ARR without once mentioning their cash flow crisis, you will be capped at the lowest marking band. You must tailor your analytical depth directly to the constraints and environment of the specific context provided.
Finally, we arrive at Section 5, the final strategy and synthesis.
To wrap up this masterclass and truly cement these concepts, I want to share a specific, highly effective memory hack. Use a visual story method to encode ARR concepts. By the end of our Digital Studies Week session, Alex and Sam both had massive personal breakthroughs. Alex realized that formulas alone don't build arguments, and Sam realized that creative arguments fall apart without structural precision. Because the 9706 syllabus demands connected, conceptual understanding, trying to rote-learn formulas isolated from reality will completely fail you. Instead, I want you to synthesize this entire masterclass into 3 core memorable pillars. Pillar 1, the 3-step question scan. Always isolate the command word, the required content, and the hidden context constraints. Pillar 2, the paragraph balance formula. Every evaluation paragraph needs an AO1 fact, an AO2 dot analysis, and an AO3 judgment. Pillar 3, the last 5 minutes review checklist. Use those final minutes to verify your formats, check your directional logic, and ensure your comparative connectives are actually comparing things. Create a visual sequence in your mind, a story of the data being extracted from the prompt, moving cleanly through your analytical framework, being mathematically verified, and finally presented in a beautiful, context-driven conclusion. Visualizing this sequence ensures you will never skip steps on exam day.
So I want to leave you with this provocative thought as we close out this explainer. When you sit down to write your very next past paper, will you be the candidate who secures every single method mark through structural precision, or will you fall into the trap of superficial breadth and panic when the numbers don't perfectly align? Crushing the Cambridge accounting exams doesn't require you to be a genius. It requires consistent, disciplined, and relentless strategy. You have the examiner's lens now. It is time to use it. I need you to take action right now. Hit that subscribe button for Ace the Exams, IGCSE, O and A levels, @handle AceTheExam_IGCSE. Turn on the notification bell so you are the first to get our future exam hacks. And most importantly, I want you to scroll down and leave a comment right now with your exact target grade. Put it out there, commit to it, and keep practicing these frameworks. Apply this elite mindset to every question you face, and I will see you in the next masterclass.